Hello everyone, welcome to the tax season. This is Catching here. Today I'm gonna go ahead and show you how to prepare the rental income parts in TurboTax. So we have Tommie Chan here. He has a rental property here in Las Vegas. So if you want to go ahead follow along, I have a Google Sheets in the description box. You can go ahead, download it, follow along. And also I have a rental income and expense sheets, so you can go ahead download it to keep track of your rental income and expenses. So let's get right into it. So once we log into the TurboTax dashboard, you will go ahead click on wage and income. So you will go ahead scroll down all the way till rental, royalties, and farm. So go ahead click started. So today we have Tommie Chan here. He's a retiree. He has a rental property here in Las Vegas, and he will go ahead report the rental income and expenses in these sections. And if you have royalty, for example, copyrights and patents, this is where you will report it, your income as well. So click continue. So property nickname, Tommie Rental. And the address is 111 Strawberry Street, Las Vegas, Nevada. Continue. So choose the type of rental that you own. So in Tommie's case, it is a single family home. Continue. So this is his first year rented out. And yes, Tommie did rent the property every single day in 2022. He didn't use it as a personal property. And he did rent it at a fair market value price. So he didn't rent it out like super cheap or super expensive. So it's always at the fair market value price. And he was so hands-on that he actively participated in the rental. For example, he make major decisions about who's the tenant and also what needs to be repaired. So he did materially participated. And he did not pay any contractor that more than $600, and he doesn't need to issue Form 1099. If the case apply to you, you will want to go ahead click yes. But in this case, Tommie doesn't apply to him, so no. Any uncommon situation apply to Tommie. So he's the only owner of the rental. So none of this apply. So go ahead review the property information to make sure it's correct. And next we will go ahead put in the income and expenses. So in Tommie's case, he did receive a 1099 miscellaneous from the rental management company, ABC Rental Management, and he received $24,000 for the entire year. So you may want to go ahead check this number to see if that's already included the minus out the management fee. If not, then you will go ahead report the rental income and then go ahead minus out the management fee in the expense sections. So who paid Tommie ABC Rental Management. And then for the federal ID number, you can find it here, payer TIN number. The rent he received is $24,000, and there's no federal tax withholding and there's no state. So make sure you check your 1099 miscellaneous form to see if there's information for the federal income tax withholding and the state tax withholding. So continue here. And did you have any more income from Tommie rental? For example, if you get paid by cash or by checks that wasn't reported on the 1099, you will go ahead input it here. So in this case, Tommie only get the 1099 form. And here is where you will go ahead put expenses. So this is a brand new property. So in Tommie case, he has some real estate taxes he paid. And we're gonna go ahead also do the depreciation as well. And he paid for insurance, premiums, repairs, cleaning and maintenance, mortgage interest because he's still paying payments for his rental home, utilities, management fees, and advertising, and also some others will be the HOA fees. Alright, so here it will explain to you the difference between repairs and improvements. So repair is something that is small that you do need to repair in order for your rental property to operate. And improvements, for example, you add a roof and also like carpeting, something that is kind of like add on to your home value. For example, building a new room, additionals, or garage. So in this case, Tommie only has repair, he didn't make any improvements. Alrighty, so let's go ahead started with the real estate taxes. So you can find it either on your 1098 mortgage interest form, usually is at the bottom of the form or the next page of the form, it will say the real estate tax. Next, we have the insurance premium. So Tommie did pay extra $500 for insurance. And then for repairs, he had some small plumbing that he did. So total cost him $300. And cleaning and maintenance. So he spent about $1,000 to hire a cleaning company to clean his home before he rented out. And mortgage interest. So the lender name is ABC Bank and he paid total of $5,000 in mortgage interest. Okay, he didn't refinance. Alright, the next is utilities. So even though the tenant's responsible for paying for water, electricity, but Tommie does need to pay for other things like sewer. So he paid $240 for the entire year. Next, we have the management fees. So it cost him $1,920 for management fees. And before that, he did run some Facebook ad to advertise his rental home. So he spent $100 for that. And also his home is inside an HOA community. He does pay a small HOA fees for the entire year for $100. Alrighty, so he will go ahead, click continue, and the next thing is the assets. So to calculate the depreciation, what you need to do is to separate the building and the land. So in Tommie cases, he was able to find the property tax paper, and luckily it shows specifically that the land values of the home is $70,000 and then the building is $280,000. So if you want to look into it, how to actually calculate it, you can go ahead take a look at IRS Publication 57. So it will show you how you can actually get the latest real estate tax assessment paper and go ahead calculate your building and the land. So now let's go ahead put the numbers here in the TurboTax for depreciations. So tell us about Tommie rental property. Was this property your residence in the past? No, it's only for rental. And how did you purchase this property? Yes, so Tommie case, he wasn't get it from like kind of exchange or anything, so he purchased it. Yes. All right, so we do need some information before we get started. So for example, TurboTax need the HUD-1 statements, closing statements, escrow fees, receipts for any home improvements, land and improvements value from your property tax bill. So in Tommie's case, he purchased the property back in October 2021, and then he put it out for rental in January of 2022. So he bought the home at $350. Continue. So the recording fees on the HUD-1 statements is $500. And just for simplicity of this example, I just put the recording fees. So in this case, Tommie didn't make any home improvements. He didn't install anything. He just bought it as it is, rented out as it is, and no energy credits. So far, Tommie rental cost basis is the purchase price plus the recording fees. All right, so Tommie find out the land values of the home after looking at the property tax paper. It was $70,000. So the building alone, so he separate the land value and the building itself. So the building is $280. So TurboTax kind of like already laid out how they're gonna go ahead calculate your depreciation cost basis. So building, land, and this is the depreciation basis, and it will be depreciate over the 27.5 years. So for Tommie, the first year of depreciation expense is $9,772. So keep in mind, you do need to take the depreciation expense every year. It's not a choice. So for example, if you miss the prior year depreciation or the year before that, you may want to go ahead do amendments. If you did miss a lot, you may want to file form 3115 to fix it. So go ahead, click continue. All right. So double check to see if all the expenses there. So total expenses is $11,000. Continue. So the next screen is to see if you qualify for the qualified business income, the QBI. So go ahead, look through the requirements. So it has to be really hands-on. So you spend 250 hours more for the rental services. You make the major decisions. You have a separate book to keep your income expenses, not your resident home, not a triple net lease, didn't rent to a commonly controlled business, and go ahead take a look of all the requirements that in order for you to be qualified. Okay, so in this case, because Tommie that hire management company to actually run for his business while he do other things on the side, so he wasn't like really participated. He didn't really participated more than 250 hours. so he is not qualified for the QBI. So double check to see if you do qualify for the requirements in order to take the QBI deductions. Okay, so it is not. Okay, so basically the grand income for Tommie rental is $3,068.